What is up, Future Millionaires? Welcome back to my channel. It's your girl, Ellie Talks Money. And in today's video, we are going to be talking about how to be your own bank. Y'all are about to be so excited because, period, this is very important information, and I want you guys to realize you can take your financial literacy and your finances and your financial future into your own hands, all right? So grab a notebook, grab a pen, and let's get into these gems.
Ellie talks money to create the better days. Business, money, life, the Ellie way.
All right, y'all, welcome back into the video. So I'm going to be talking to you guys today about how to be your own bank. And let me explain what I mean by this. What I mean is through certain financial vehicles, you are able to be your own bank in that you can borrow money from yourself. All right. So the way I'm going to split this video up into two parts. So if y'all want to, if already you're hearing it and you're like, ooh, this is what I need, and you all know you want a part two, comment part two down below, all right? Comment that right now. So what I'm going to discuss today is how to be your own bank with regard to life insurance, okay? Now, you may have heard this concept as infinity banking. There are so many different titles for it, but what it really comes down to is getting life insurance policies that allow you to borrow against the policy, and this is how you become your own bank. So let's start with the steps. Now, I want to break down life insurance for those of you who are new to life insurance or may not have a policy yet. There's two different types of policies. There's term policies and there's whole life policies. In order to successfully be your own bank, you need to have whole life policies or permanent policies. So we'll get into those in a moment. Term policies are, just as the name suggests, policies that last you for a certain term. So these are not lifetime policies. These are not ones that stay with you until you pass away. These are 20-year, 30-year, or maximum 40-year terms. And typically these policies tend to be a lot less expensive because of the fact that they don't last forever. So you can get $1 million term policy for $30 a month, let's say, but you cannot borrow against it, and a term policy is not going to build you any cash value. Now, let's head over to our homie whole life and permanent policies. These are lifetime policies. So these will last you until you're 120 years old. They are going to be more costly than term, but they stay with you forever and they build cash value. So $1 million whole life policy might run you a few $100s a month, but it's going to be building cash value throughout. So you have different types of permanent policies. You have index universal life, variable universal life policies, which I can break down in a separate video. But essentially what this means is these different policies grow along with the stock market at different rates. So index universal life policies, for example, are typically aligned with the S&P 500. And so your cash value is going to be growing along with the market. On the other side of it, general whole life or permanent policies have stable cash value amounts that are usually between 5 to 8%. And so your money is always growing at that 5 to 8%. So let's think about this, right? When your money is sitting in your business account or your personal account, it's earning 0.01% interest. When you pay a life insurance policy, that cash value is building at anywhere between 5 to 8 or 10, 11% interest, depending on the type of policy that you get. So that in and of itself shows you how much harder your money can be working for you by acquiring life insurance. Now, of course, life insurance also has the other benefit of when you pass away, your family not being left with all your debts and getting a, large financial sum of money. But the living benefits of being your own bank is what I want to focus on. So, boom. Now that we've covered the difference between term and whole life policies, I want to explain to you guys how you become your own bank. So you know that you're going to need a whole life or permanent policy, and you want to ensure that you work with a life insurance producer that can get you a policy that has a great cash value. So some companies I'm a life insurance broker, by the way, if y'all didn't know, I've had my license for probably 5 years now. And so a lot of companies like National Life, Mutual of Omaha, New York Life. There are several that offer good life insurance policies. So what you want to ensure that you get a policy that builds cash value, and what you need to understand is you can typically borrow from your policy within that first year to 2 years. Like, you need to go through the first 12 months before you can start borrowing, and some policies, depending on the amount, you have to go through the first 24 months before you can start borrowing. But by then, money has already accrued in the account. So let's say you want to buy a house, right? Let's say you want to buy a house. Let's say you want to invest in the stock market. Let's say you want to start a business. Instead of you going and getting a traditional loan from the bank where you have to pay money back to the bank, typically at a higher interest rate, you can instead borrow that money from your life insurance policy and make your payments back to yourself. Now, here's the thing too, you're not required to make these payments back to yourself. If you don't pay back your loan and you pass away, that money you borrowed will simply come off of your death benefit. So to some of you, that's fine, it's not a big deal. To others, you would rather prefer to pay it back. Either way, you're paying back money to yourself, right? So let's look on a bigger scale. Let's say you get a $2 million policy that's building cash value for you. In that first 3, 5, 10 years, you'll have potentially $300,000 in cash value acquired. Take out $100,000. Let's say you want to buy a duplex, right? Now you've borrowed against yourself because you have this policy. You've leveraged that to secure another asset that's going to bring you passive income, and your life insurance policy is still intact, still growing, still building, still giving you cash value. This is how you really free yourself from the cycle, right? This is how you get out the system. This is how you ensure financial legacy for your family for generations to come. And the reason why this is so important is not just the information, but the execution of it. And when you pass down this information to your kids, guess what? They're gonna know to get a life insurance policy from a young age and leverage that as an opportunity for them to borrow against. As well, if you do have kids, you can get a whole life policy for your children starting as young as 1 year old, right? And so that policy will last them until they're 120. It's also building cash value for them. So by the time they're 18 or 25, let's say they want to get married, they want to buy their first home, they want to start their business, they have that policy as well to go and borrow against to be able to have that money. So they're not in your pocket, they are using the life insurance policy that you set up for them from a very young age. I mean, like, y'all, it is crazy. So that's the steps. Secure a life insurance policy. Make sure that it is permanent, a permanent or whole life policy. Understand the cash value accrual rate that it is going to be building at. Let it build up. Borrow against it when you are looking to invest, buy an asset, or scale a business. Either pay it back in payments, which you're paying to yourself, or not pay it back and allow that money to be taken from your death benefits, and then continue to borrow against it again as you have more opportunities that come up. And make sure you start executing this for your kids too. So comment down below what questions you have on this, because I know I probably just blew your head off today and I don't want to leave y'all walking around headless. So comment down below any questions you have in regards to this topic. And in part 2 of this video, I will be explaining another way that you can be your own bank through certain investment accounts. All right? See you guys soon.